The House of Tax Policy Committee will come to order. Would the clerk please take attendance?
Chair Neely.
Here.
Representatives Farhat.
Here.
Brixey. Here. Carter.
Here.
Whitsett. Grant.
Here.
Price.
Here.
Van Workum.
Here.
Markkinen.
Here.
Outman.
Here.
Tisdale.
Here.
Hoadley.
Here.
Madam Chair, you have 11 members present. You do have a quorum.
Thank you. Vice Chair Farhat makes a motion to adopt the minutes from May 22nd, 2024 meeting. Without any objections, the minutes are adopted. For today's agenda, we will have testimony and vote on House Bill 930, MOS. It'll be an adoption of a substitute H2 to House Bill 5022 with testimony and vote on HB 5022 and 5645 Shannon. Testimony only on HB 5639 Mentzer, 5638 Farhat, and 5637 Churches. Now we will take testimony on House Bill 5022, Rep. Farhat.
Thank you, Madam Chair and members of the Tax Policy Committee. Today before us is House Bill 5022, which simply seeks to clarify the tax filing process for those that are filing in our state. And the bill before us with the substitute is the result of a very year-and-a-half-long work group between the Michigan CPAs, the State Treasury Department, and myself and a few others to make sure we got this right. And I'm glad to share that Treasury is supportive of the substitute because we worked on this in a way that made sure we protected the state's interest in the way that these filings are happening, while also protecting the consumer's interest and making sure that we're not overtly complicating the filings or making it so that it's difficult for them to take advantage of the credits that they're entitled to. As it stands now, you would have to elect at the beginning of the year whether or not you believe you'll be profitable or not. That's a awkward spot to be in, and so it causes many folks to file an extension. And if that doesn't happen, that means they missed out on the benefits potentially. This bill seeks to change the election date so that they can elect in a way that makes sense with their profits for that year. I would want to welcome the CPAs up here as well, if it's okay with you, Madam Chair, to share some testimony and answer some questions.
Madam Chair and members of the committee, thank you for the opportunity to testify before you today. On behalf of the more than 17,000 members of the Michigan Association of CPAs, representing every corner of Michigan's economic marketplace, we are here to express the CPA profession's support of House Bill 5022, a proposal to update the implementation of the flow-through entity tax in Michigan. Michigan's flow-through entity tax, or FTE, which was signed into law December of 2021, which was actually originally a Representative Tisdale bill, which had bipartisan support, was a welcome tax benefit for many taxpayers and business owners across the state. Through the implementation of the tax during the past tax season, our practitioners recognized some nuances in Michigan's law that made the application of this credit difficult for many business owners. House Bill 5022 seeks to address these difficulties and put Michigan's tax law in line with many other states that have enacted a flow-through entity tax. This bill does not change the intent of the flow-through entity tax, but rather addresses implementation concerns. MICPA has been working closely with the Department of Treasury over the last year to develop these solutions to the implementation concerns. Treasury has been a great partner with MICPA, and I'm pleased that we have come to a resolution in this bill, which is supported by Treasury. I forgot to introduce myself. My name is Bob Doyle. I'm the president and CEO of the Michigan Association of CPAs. And with me today is John Erdley, who is the state and local tax partner from Crow and current chair of MICPA's State and Local Tax Member Resource Group. So he's going to talk through some key changes in the bill.
Thank you, Bob. House Bill 5022 has three key changes. The first is the change to the election date. Currently, the election date is March 15th of the tax year, or the 15th day of the third month if you're a fiscal filer. The new bill will allow the election to happen by the extended due date of the tax return, which is 9 months after the tax year. This is beneficial because currently you have to elect into the bill and you may not have taxable income. You won't know until the next year. Therefore, it's a bit inefficient. Business owners won't know if they're going to have taxable income by March 15th of the current tax bill. The new deadline will allow more Michigan business owners to take advantage of the federal tax deduction and elect into the pass-through entity tax regime. The second update to the statute that we currently have is timing of the credit. Currently, any payments made after March 15th of the subsequent tax year cannot get credited to that individual's individual income tax and follow the income. After 3/15, the credit would go to the subsequent tax year. This bill will allow any payments made for the tax year to follow the income to the individual. It clears up a mismatch of potential credit from potential income based on a payment date. The third thing that this bill does is add some safe harbors related to penalties. Currently, the safe harbor is if your liability is under $20,000, you have to make 4 equal payments under the $20,000 to have safe harbor. This new bill adds 3 new safe harbors to it. For 2024 and onward, if you pay in 90% of your tax liability with the return, you're not subject to penalty. You can pay 90% of the prior year tax liability. Check that. 90% of the current year tax liability. 100% of the prior tax liability, or if your AGI is over a set limit, 150% of the prior year tax liability. Finally, this legislation reinforces Treasury's authority to require taxpayers to provide any necessary information to substantiate the credit claimed. In doing so, Treasury has the ability to verify the legitimacy of the claims and prevent errors or fraud, and to maintain integrity of the tax regime. Thank you.
Thank you very much, John. As Representative Farhat mentioned, this has been a great task force working together with MICPA and Treasury to come to this resolution, including the transparency of upstream and downstream participants in the FTE. So we want to personally thank you for your time today. Our profession serves as the most trusted advisor to their clients, and our members stand united in our commitment to protecting the public interest. Please know that the changes proposed will ensure that more business owners across the state are fully able to take advantage of this tax credit with no harm to Treasury. Thank you very much.
Rep. Farhat has a substitute H2 to the House Bill 5022. Would you like to speak to that?
The testimony given was on the substitute, so that is what we'll be adopting.
Representative Grant makes a motion to adopt H2 substitute. Ms. Clerk, please call the vote.
Chair Neely,
Yes.
Representatives Farhat,
Yes.
Brixey,
Yes.
Carter,
Yes.
Witset, Grant,
Yes.
Price,
Yes.
Van Workum,
Yes.
Markkinen,
Yes.
Outman,
Yes.
Tisdale,
Yes.
Hoadley.
Yes.
Madam Chair, you have 11 yeas, 0 nays, 0 pass. The substitute is adopted.
Do we have any questions? Rep. Brixey?
So, is this still going to be revenue neutral, and how is it going to be revenue neutral?
Yeah, so the intention is to keep it revenue neutral. I think that's a great question for Treasury, if they're here on Zoom, to be able to speak to that, because that was
We're
a big
here in
point.
person.
In person, yeah.
The simple answer is yes, it is revenue neutral.
Okay, and I know that this was a little bit of a bumpy road in the past when we had this, and I believe that I was opposed to it, the pass through to begin with. How is this a benefit, the change to Treasury?
To Treasury. Certainly, it helps to clarify our ability to identify indirect credits. That's a key part of what the changes are. And you're right, implementation was bumpy. This was an intense tax structure that was set up in a relatively short amount of time. So we've been able to review over the last couple of years what changes needed to be made, and we agree with those that were made and proposed by the CPAs, but we also wanted to integrate some of the other administrative changes that we need to make it easier for both for us and for taxpayers and their ability to be able to claim these credits as well.
Okay, thank you.
Rep. Carter.
Thank you, Madam Chair, and thank you for your testimony. I just have one question. Have businesses and other CPAs weighed in on this with concerns or approvals?
Generally, yes. CPAs are in favor of this change as it's going to make the administration and the compliance with the law easier. Yes.
So CPAs, I said businesses and CPAs. So did you have any input from businesses?
If I may, Representative Carter, so we worked closely with with industries impacted to make sure it made sense. And ultimately, you know, we want to make sure that we're also protecting the state's interest too, and that's why we had Treasury at the table and the CPAs who do the filings oftentimes for the business community. But yes, we did listen to and talk to folks in the business community, as well as the filers and the CPAs who do it.
Thank you very much.
And thank you guys for coming up. And can you just give us your name for the record for me?
Amanda West with the Department of Treasury.
Thank you so much. Thank you guys for coming up. We appreciate you. Now we're reading card. We already had Amanda West come up from tax policy, from Department of Treasury, excuse me, who's in support of the bill. And also in support of the bill, but not wanting to speak, and Mike Johnson from MMA. Also in support of the bill is Tim Longwolf from NFIB, supports the bill. Representative Carter makes a motion to report House Bill 5022. Ms. Clerk, please take the vote.
Chair Neely,
Yes.
Representatives Farhat,
Yes.
Brixey,
Yes.
Carter,
Yes.
Witset, Grant,
Yes.
Price,
Yes.
Van Workum,
Yes.
Markkinen,
Yes.
Outman,
Yes.
Tisdale,
Yes.
Hoadley.
Yes.
Madam Chair, you have 11 yeas, 0 nays, 0 passed. The bill is reported with recommendation as substitute.
Thank you. Now we would take up testimony and vote on SB 930. Senator Mosk, would you please come up?
Thank you, Madam Chair.
And we also have with you Raj. Forgive me if I'm messing up the last name. What was the pronunciation of that last name? Wasala? Lasawal. You can come up.
Lapsawala, he is on Zoom.
He's on Zoom. Okay.
As
we
is
have him.
Alex Mooney.
All right. Okay.
All right.
You may start.
Thank you very much, Madam Chair. Appreciate the flexibility in placing this on the agenda here today. So the premise of Senate Bill 930 it deals with these third-party delivery services like DoorDash or Shipt or Instacart that obviously are becoming increasingly popular and increasingly convenient to use. But existing statute has created a situation that results in the application of the sales tax twice on them in certain circumstances. So under current law, these third-party delivery services, they are required to remit sales taxes on orders as they process them and deliver them to customers. So major retailers like Meijer, they have the ability to update or modify their point of sale software and turn off off the sales taxes when a third-party delivery service comes in, picks it up, and completes the order. But many of these mom and pop stores, don't have the capability to invest in such a system, and as a result, they collect and remit the sales tax on the order as processed by a third-party delivery service. So when that happens, the sales tax is sent to Treasury when they place the order, and then the grocery store and the retailer will also collect the sales tax again when the delivery service picks it up for their client at the retail store. So instead of putting the onus on a small mom and pop shop to invest in probably what is an expensive system to figure out when something's being picked up, turn off the sales tax, etc., we want to instead put some flexibility on these third-party services to give them the ability to submit to the Department of Treasury when at the end of the year on their annual return if they collected the sales tax on a specific delivery twice. So I hope that made sense. If not, we have further experts in this, including Raj Lipsawala, who is the Senior Manager for Tax Issues at Instacart, and Alex Mooney on behalf of DoorDash. And we worked with the Department of Treasury, which is also in support of this bill.
All right, thank you. Now we will go to Zoom to Raj Laswat.
Members of the House Committee on Tax Policy. My name is Raj Lapsawala. I'm the Senior Manager for Instacart. I'm here today to testify in support of Senate Bill 930 that would create a mechanism for delivery network companies to deduct or otherwise exclude from a sales tax liabilities the amount of sales tax paid by the delivery network company to a marketplace seller. Importantly, the bill contains requirements such as the delivery network company not being able to claim a deduction or exclusion if the marketplace seller did not actually charge the delivery network company the tax, and the amount of deduction or exclusion cannot exceed the amount of tax that was actually charged by the marketplace seller to the delivery network company. Instacart is the leading grocery technology in North America, working with groceries and retailers to transform how people shop. In Michigan, we partner with over 80 retailers across more than 2,500 stores, helping them grow their businesses and support local communities. Since our company's founding, Instacart has been proud to help Michigan grocers increase their sales by more than $150 million and have supported the creation of more than 4,300 brick and mortar grocery jobs across the state, from cashiers to bakers to store managers, according to research provided by the National Economic Research Association. On the Instacart platform, consumers can shop for goods from a local retailer. After selecting goods, the consumer would check out and pay for the goods, including applicable service or delivery charges. An independent contractor, what we call a shopper, will then pick, pack, and pay for the goods at the retailer's physical store location. Because most small businesses are not able to implement a technology solution to suppress tax at the point of sale system for marketplace facilitated sales, the shopper will also pay tax on the purchase of goods at the retailer's brick and mortar location. When the shopper pays for the goods at the retailer's point of sale system, the tax is paid by the delivery network company, resulting in double taxation. The consumer is charged tax only once. However, the marketplace facilitator remits the tax collected from the consumer to the Department of Treasury, and the retailer in turn remits the tax collected from the marketplace facilitator to the Department of Treasury. Many retailers that were already collecting and remitting taxes have faced large operational and technological challenges in shifting the tax remittance to marketplace facilitators. Implementing or upgrading systems to account for significantly increased compliance obligations has been both costly and a lengthy process for retailers, and has proven unfeasible for small businesses. Instacart facilitates online orders for brick and mortar retailers, many of which are small businesses that are unable to build their own websites. These small businesses have a long established history of sales and use tax compliance in Michigan. As these small businesses have limited resources with respect to tax departments or engineering teams, they have been unable to suppress tax in their store's point of sale system. Less than half of the retailers operating on the Instacart platform in Michigan have been unable to suppress tax due to these challenges. allowing delivery network companies to claim a deduction for tax remitted at a store's point of sale system results in fair tax administration, as it substantially reduces the amount of double tax that a delivery network company has to bear. This does not result in loss of tax revenue for the state because the state would receive the appropriate amount of tax, whereas without the deduction created by this bill, the state would continue to receive tax revenues in excess of what is legally due. The bill will also relieve small businesses of administrative burdens such as manual internal processes. The impact of increased tax compliance and the effect of double tax is ultimately borne by consumers in the form of increased prices for goods and services. Increased costs may deter some customers from shopping on marketplaces that could otherwise provide access to time and cost savings. It may also result in reduced sales for small businesses. Instacart appreciates the opportunity to work and collaborate with the Michigan Department of Treasury on this bill, which would result in fair and efficient tax administration. Thank you again for the opportunity to testify before you today. I would be happy to answer any questions.
Do we have any questions? Look like we have no questions. Thank you so much, and we appreciate you. Do we have Alex Mooney?
Yes, hello. And thank you. I will be brief because Instacart said much of what DoorDash shares as well. But thank you, Chair and Vice Chair and members of the committee for your time in addressing this important legislation. And thank you to Senator Moss for sponsoring it. I'm pleased to register DoorDash's support. And I should also mention, just for the record, my name is Alex Mooney, and I'm a legal policy advisor at DoorDash. So, as has already been stated, this legislation really addresses an important issue that has emerged in recent years with delivery network companies like DoorDash, which also act as marketplace facilitators and are required to collect and remit sales tax through our platform. While marketplace facilitator requirements are common sense and work is designed in many cases to ensure that the proper amount of sales tax is collected and remitted to the state, there are instances, as has been described today, where a transaction is taxed twice under the current law. Our setup is similar with Instacart, and this issue arises when DoorDash collects tax through our platform, and then the merchant, example would be a grocery store, convenience store, or retail store, collects tax on the same transaction at the point of sale when a delivery driver, which we call dashers at DoorDash, go into the store to pick up the items and pay for the merchandise. In such instances, both DoorDash and the merchant are remitting tax to the state of Michigan on the same transaction, thereby leading to double taxation. Current law in Michigan does not allow DoorDash to take a credit for the tax paid for the tax that we pay to the merchant at the point of sale. So this bill provides a common sense solution, which is I should mention, available in several other states already. It would allow us as a delivery network company to deduct from our liability the amount of tax that we've already paid to the marketplace seller and which the seller has remitted to the state. So we think this is a very important piece of legislation, and I'm happy to speak in support of it today. Thank you for your attention.
Thank you. We do have a question from Rep. Carter.
Thank you, Madam Chair. I'd like to know, I think you've answered this question, but I'd like to know what provisions are in place right now if you have a dispute or a tax error. How is that going to be addressed?
Treasury is probably the best suited to answer that.
Okay, thank you.
One of my colleagues is on Zoom because he's sick today, and he'll be the right one to answer this. So Dave Metelsky from Treasury will be able to answer that. What to do if there's a dispute?
Yes, or tax errors.
Okay.
Hi, thank you for that question. Dave Metelsky, I'm the administrator of Treasury's Tax Policy Division. I guess I would want to know clarification. Would this be a dispute between the Michigan Department of Treasury and Instacart or DoorDash, or a dispute between the taxpayer and the business?
And that's a good question. How about both?
Well, as far as disputes between Michigan Treasury and and any of their taxpayers that are emitting the tax, those would be handled through our normal channels. The Revenue Act provides all of the information about how taxpayers can appeal any sort of refund denial or tax assessment that's issued by the Department of Treasury. As far as business disputes with their own customers, I think that's really just a matter of what those businesses' policies are and what their contracts with their customers look like.
Okay, thank you.
Of course.
Any other questions? Seeing there's no other questions, thank you so much. Representative Price, make a motion to report SB 930. Ms. Clerk, please take the vote.
Chair Neely,
Yes.
Representatives Farhat,
Yes.
Brixey,
Yes.
Carter,
Yes.
Witsit, Grant,
Yes.
Price,
Yes.
Van Workum,
Yes.
Markkinen,
Yes.
Outman,
Yes.
Tisdale,
Yes.
Hoadley.
Yes.
Madam Chair, you have 11 yeas, 0 nays, 0 pass. The bill is reported with recommendation.
Thank you. Now we will take up testimony and vote on HB 5645. Rep. Shannon.
Well, thank you, Madam Chair and members of the committee for having me here today to discuss House Bill 5645. This legislation is an important step forward in enhancing the efficiency and transparency of the Michigan Tax Tribunal, while also ensuring the protection of confidential information. House Bill 5645 clarifies the types of evidence that the tribunal is allowed to use, ensuring decisions are based on reliable business practices and standards. This change will help streamline the process, enabling the tribunal to protect information by narrowing the review of local government and taxpayer data to reasonably protect the confidentiality of the information. As a result, the decision-making process will be faster and more efficient, which will benefit all parties involved. My bill would also provide critical measures for protecting sensitive information. With the increased use of protective orders, this bill ensures that confidential data, such as trade secrets and personal information, can remain private. This is particularly important for safeguarding taxpayer-sensitive information from unnecessary exposure. It is important to note that around 2020, delays in tribunal cases became a significant issue, primarily due to concerns about maintaining confidentiality. For example, there was a situation where a private citizen's W-2 information was mistakenly made public and found on a state website. This kind of incident could have been handled with the protections outlined in House Bill 5645. In conclusion, House Bill 5645 aims to make the tax tribunal process clearer, fairer, and more efficient. It is designed to enable the tribunal to proceed without delay and make decisions on protecting sensitive taxpayer information. And this bill strikes a vital balance between transparency and privacy by protecting sensitive information while ensuring public access to important details. So thank you, Madam Chair and members of the committee, for your time and consideration of this legislation.
Do we have any questions? Seeing there's no question, thank you so much for testifying in front of tax policy today.
Oh, thank God. Thank you.
Now we're reading the cards. Supporting the bill but not wanting to speak is Leah Robinson from Michigan Chambers of Commerce. Also supporting the bill is Brian Kendall from Honeydew LLP. Also supporting, that's two, Michigan Chamber, Leah, we already read that one. And also supporting the bill but not wanting to speak is Mike Johnson from MMA. Opposed to the bill is Amanda from Michigan Assessors Association, excuse me. Also neutral on the bill is Michigan Municipal League. And also neutral on the bill is Michigan Township Assessors, sorry. Now we're asked Representative Brixey to make a motion to report House Bill 5645. Ms. Clerk, please take the vote.
Chair Neely,
Yes.
Representatives Farhat,
Yes.
Brixey,
Yes.
Carter, Whitsitt, Grant, Price,
Yes.
Van Workum,
Yes.
Markkinen,
Yes.
Outman, Tisdale,
Yes.
Hoadley.
Yes.
Madam Chair, you have 11 yeas, 0 nays, 0 pass. The bill is reported with recommendation.
Thank you so much. Now we would take up testimony on House Bill 5637, Churches, 5638, Farhat, 5639, Mentzer. Here to speak on the package is Rep. Farhat and Senator McDonough-Rivet. Welcome to Tax Policy.
Thank you very much, Chair Neely and members of the committee. We're here to talk about my favorite topic, which is childcare. I'm sure that most of you know that Michigan, like the rest of the country, is in the midst of a childcare crisis. In the last decade, the U.S. has lost almost 20% of its childcare capacity, but in Michigan, we have lost almost 40%, double that. Childcare providers are struggling to keep their doors open, and as closures become all too common, centers that do not stay open often have waiting lists that exceed 2 years. Particularly for infants. So I will tell you the joke in my office is, if you go on a first date and it goes well, get yourself on a child care list, because that's how long it's going to take you to actually get a kid into care. So since the pandemic, the scope of child care problem has reached a tipping point in our economy. It's exacerbating workforce shortages and impacting our productivity. The lack of child care is one of the leading reasons Michigan's dropped to 39th in the nation for workforce participation. The lack of childcare is the #1 reason young workers are choosing not to enter the workforce and finding a solution, and it's now ranked as the #1 concern for employers. It's a listed priority of the Chambers of Commerce, business leaders of Michigan, and virtually every other major employer in the state. Michigan cannot be attractive to businesses without a ready workforce. Increasingly, young professionals are prioritizing childcare as one of their top amenities when deciding when and where to start a family. The broken childcare system is a threat to the economic prosperity of our state. So here's the core of the problem. It's a broken business model. On average, it takes roughly $15,000 a year to provide full-time care for a child under the age of 5. $15,000 a year. Full-time is defined as 7 a.m. to 6 p.m. in a state where over 60% of our jobs pay less than $50,000 a year. Remember what take-home pay looks like on $50,000 a year? And then think about childcare at $15,000 post-tax dollars. So why are childcare businesses struggling when parents are paying so much? In short, kids are expensive. I have 6 of them. State licensing requirements rightfully impose adult-to-child ratios on these businesses and other measures to ensure safe and quality care. So this means that there's a ratio of 1 to 3 for infants and 1 to 12 up to 4-year-olds. So when we're looking to expand things like access to universal pre-K to 4-year-olds, which is an essential, it's an essential thing that we do, it's the right thing to do. It's essential that we provide mixed-use models that allow our classrooms to partner with our child care providers. Without these partnerships in process, we are going to see more providers continually closing their doors and exacerbating this crisis at this level. Additionally, it's important to note that babies and toddlers are just more expensive. Facility costs are higher than in most businesses due to the necessity of safety and education needs of our very young children. Covering these costs leaves a very small margin to pay staff a living wage. Most providers make less than $15 an hour, and over 20% receive at least one public safety benefit. So in short, the cost of childcare is way more than most parents can afford to pay. So we have ways to address the crisis. 3 of the bills you are considering today. You'll hear from a lot of stakeholders on this issue with lots of different ways to address it. And I want to come to you, and we had a hearing in the Senate about this as well. I want to emphasize that there is no one solution, and this is not a time for small fixes. Moving the system from broken to soluble requires a large, sustained public investment on both the demand and supply side of childcare. The legislation and solutions that we have worked on aim to make childcare both affordable for families and sustainable for childcare professionals and entrepreneurs. The 3 bills you are considering take steps toward that. A bill that is before you and not yet in a hearing is the Working Families Tax Credit, which I'm sure we'll be talking more about in the next couple of years. That actually puts more dollars in the pockets of parents and children from infancy through preschool eligibility, and I would be very happy to come back and talk about that bill when you decide to take it up. Public investment in child care operational grants and startup capital for licensed providers caring for infants and toddlers is a critical piece to help stabilize child care businesses and free up resources to increase staff wages. Streamlining and expanding access to child care subsidies. This is the crux of the matter. We have to reestablish provider rates at the rate of fiscal year 2023. And we have to ensure that we are eliminating unnecessary licensing requirements and expand contract-based subsidies for providers caring for children with special needs and are working in areas with concentrated poverty. I have run a child care center. I've run a private child care center. I have put, I don't know, I've got like 47 children. I've put my own children through child care. It is broken. This isn't mismanagement. This is a crisis that is impacting our economic well-being as a state and our population. So currently, Michigan's childcare system is one of the most fragile in the country. The sector is in a state of rapid decline. Only an immediate, sustained public investment will change its course. Now, I will tell you there is a plan that requires an additional $1.5 billion in the next fiscal year. It's a substantial investment. But the total cost actually pales in comparison to the cost of no action. According to a recent study from the U.S. Chamber of Commerce, the Michigan Chamber of Commerce, and the Early Childhood Investment Corporation, Michigan loses $2.8 billion annually due to the lack of reliable child care in the form of workforce productivity and economic gains. This is not an issue of playing small, and I also believe with priorities, we can find these dollars by reallocating other monies. So with that, I will stop talking and turn it over to my colleague, Representative Farhat.
Thank you, Senator. And that was very eloquently stated. You know, childcare is a real issue that many of us here in our districts. In my district, families are struggling to be able to go to work, even advance themselves in their area of employment, and still find a way to take care of their kids. In my own home, it's an issue. There's seldom a day where I visit my mom or one of the grandkids isn't over and being watched, simply because it's too expensive. The burdens and the costs associated with childcare are crippling the families of our state. They're crippling their economic potential. And to the point the senator made, we are in a state of free fall right now when it comes to childcare in our state. It is to the point where providers are struggling to be able to meet demand, and where there is demand, there are no providers. It is to the point where now other communities and young folks are starting to look to other states as means to accommodate a work-life balance, where if you want to get a professional career, you want to pursue a career, you want to be able to watch your kids, someone to do it safely, someone to do it adequately. This is a real problem. The package before you today, folks, addresses some of the licensing issues that make it more difficult and that add either time for a child care center to come online or make it burdensome for them to enter that market to begin with. I think in a lot of ways it streamlines this process while keeping the safeguards that parents and the families that trust us to implement are there, so that their kids are safe, their kids are being watched in a responsible way without burdening these providers. Again, the senator did an excellent job highlighting the overall crisis and the image of what it's like in our state to be a child care provider. You know, it was a very good solution, Representative Van Workum. I know that's a word we use often in this committee, that I think the people of Michigan are asking us to take up. And so I welcome feedback and commentary from my colleagues here.
Rep. Price.
Thank you both so much for your work on this important issue. As a former high school teacher who left my career due to the cost of childcare for 2 kids under 2, this one hits home, and I know it does for a lot of my constituents as well. We know this is an important issue. I believe that adjusting the reimbursements for the cost of inflation is a fantastic start. I also recognize that there's more work to be done. As somebody who serves on the DHHS subcommittee for appropriations, I just want to make sure that this legislation wouldn't prohibit the legislature from providing a larger than inflationary increase in the child care reimbursement rates through the annual budget process if we had the opportunity to do so.
Thank you for the question, Representative. Just in lieu of time, I will just tell you, no, it would not.
Minority Chair Ben Wicker.
Thank you, Madam Chairwoman. Simple question, why the Detroit Consumers Price Index? Why did you choose that as the inflationary?
It made practical sense, but we're opening to using a different price index if you thought it was more reasonable.
Because I think we're doing regional prosperity ones now. Is that correct? Maybe I have that wrong, but then you have the general CPI as well, and there's certainly different indexes that are out there that would possibly relate to this as a wage thing rather than a consumer price thing. So I didn't know if there was any consideration of why the Detroit Consumer Price Index rather than some other indexes that are out there.
I think it generally ends up with a higher subsidy rate. Let's start with that. But I would tell you that for the way that I look at it, and this should be a continuous, years-long dialogue with the legislature about the state of childcare. It is incredibly complex, but right now that complexity has turned into no action. So the discussion is a really good one. My default generally, and as we talked about this, we were 18 months in developing this package. I actually think that the least complexity, complexity. It's been a very long year for me all. We give to government in administering these sorts of things, the better it's going to be. So I would tell you, when I ran a child care organization that took subsidies, we cared for 350 kids a day, and I had to enroll three full-time staff members just to process the paperwork because it is so difficult to access. It is so difficult to understand. So one of the things that I worry about if we start to go to a regional approach is community action agencies that may span 2 different regions, or companies that are working across the state, or just the difficulty in understanding that a rate in Clare County is not going to be the same rate in Bay County. So I think it's something to consider on the processing of it, but it shouldn't sink the idea.
Okay. Well, thank you for that. I do know that this past legislatures have been working on child care. There was a package my second term, certainly worked on the Tri-Share program as well. So it has been addressed, but I appreciate you bringing this forward. Again, going back to the Consumer Price Index, so it would affect the dollars that are coming from the federal government under the Child Development and Care Program, correct? And have we gotten clarification from the Fed that we are allowed to use those and do it? And is there any concern of how far we could reach of how many kids serving or utilizing that dollars if we start adjusting this to inflation rather than getting it to more kids and families?
You know, it's a balancing act, right? So the Child Care Development Block Grant, which comes from the feds, it comes in the form of a block grant to the states, right? There's a lot of leeway of what states can choose to do that. The reality is most states add general fund dollars to their subsidy payments to make them go farther. Michigan chooses not to do that. That's why we have one of the lowest subsidy reimbursement rates in the country, which is part of the reason why we've lost 40% of our capacity. So all of these things are stacking up on top of each other. There are requirements, and who knows within the next 2 years what federal block grants look like when they're coming to the states. But the ability to go back to the FY 2023 rates that were already passed by the legislature, to go back to that rate, and then simply just tie it to what we know happens in terms of the cost of services. So as you're doing that and you're adding that using a CPI of some kind, right? What that does is actually takes childcare off the political volleyball in the middle of a budget season, when we know particularly given the level of importance that has been placed by our employers and our chambers, that it is one of the critical pieces to getting the workforce moving, getting our workforce participation rates up. It's about drawing a line, a box around what we know is that critical for the piece, but it's not going to affect it will not affect our actual grant, our block grant from the federal government. All of this is allowable within those standards.
All right. Thank you, guys. I really appreciate you coming in. Have a great day. We're going to read in the one card we have here. Katrina Rendell, not wanting to speak but support the bill, Early Childhood Investment Corporation. Now, Representative Grant makes a motion to excuse absent members. Without any objections, absent members are excused. We must re-refer House Bill 4753, Wenzel, to the House of Committee on Energy. Madam Clerk, will you take a vote on that?
Madam Chair Neely?
Yes.
Brixey?
Yes.
Carter?
Yes.
Witsit? Grant?
Yes.
Price?
Yes.
Van Workum?
Yes.
Markkinen?
Yes.
Outman?
Yes.
Tisdale?
Yes.
Hoadley?
Yes.
Madam Chair, you have 11 yeas, 0 nays, 0 pass. The motion prevails.
Thank you so much. There being no other further business before this committee stands adjourned.